How was the meeting with Trichet, and do you think European citizens can be more confident for the destiny of the investments in the near future?
We had an excellent meeting with Trichet, but also with the two commissioners, Almunia and McCreevy, in the Economic Committee. And it's clear that the crisis is very serious, so we can't just say, well, it will be all under control. And the important thing that we stressed was that we really have to take structural measures. So we discussed with all the three of them that we really have to find structures of monitoring, of supervision, which are much more adequate to prevent this type of crisis. Of course, the European Central Bank, Trichet, has taken measures which are the right measures, we think, but it's ex post, it's afterwards, and we should prevent this type of crisis to occur. So this is what we wanted to stress. And McCreevy, he's the one who doesn't want regulation, who doesn't want stricter supervision, who says, well, the business can do it themselves, and hedge funds, it's all perfect, it's beautiful that there is this diversification, and well, if people lose money, that's the game. And he doesn't take serious the consequences for the economy. Their companies are in trouble. They can't get credits anymore. This is what we really have to take seriously. So it's not just that those people on the financial markets can just do their gains and their speculation. We have to force them to remain into some rules of the game which don't endanger the economy, our companies, our jobs, the interests of our people.
And which measure European Parliament can think about to regulate the European financial market?
Well, we have in the PS group presented a thick report on hedge funds and private equity firms with a lot of suggestions of regulation, but also monitoring and supervision. And just before the summer, I presented to the plenary of the Parliament a report on the action plan for the financial markets, where I also urge for European level supervision for these bigger players. We have the investment banks, we have large players who are not national anymore, but are globally acting worldwide, and there we need to have a very strong European supervisor, because all the fragmented supervision structures, they don't get the complete set of information. There's a lack of knowledge, there's a lack of information about what is happening. So we really need a very strong European level supervision, including the knowledge and the know-how of the European Central Bank.
And do you think the European Union countries can suffer a crisis like the crisis will lead to United States in summer?
Well, the problem is that what happened in the States with these mortgages, with these subprime mortgages, it's all spread out in risks to all kinds of products. So it's also pension funds, it's also European banks, European investors who have bought securities which have this type of risks now included, and it will be difficult to really oversee what exactly is the risk. So there is now an insecurity in the market. The banks don't want to lend each other money anymore, and this is the insecure situation, and this we really have to solve by very strongly forcing them, also these big investment banks, to disclose and to tell the supervisors what risks there are really in their portfolios, and then we can try to solve the crisis. But this insecurity will undoubtedly have an effect on on the economy. But never the basis is solid. If we have economic growth, Mr. Almunia, the Commissioner for Macroeconomic Issues, has also made clear is that there is a healthy situation in the economy. It's purely the financial markets which are now the problem, and this is exactly what we as a PS group have been focusing on with this report on hedge funds and private equity, with our appeals for better regulation and better supervision. The financial markets should not be the main players. They are an instrument for the economy, and this should be brought back to that principle again.